There is a lady who is sure all that glitters is gold, and she's buying a stairway to heaven. Since the 2022 lows, gold has had an insane run, over 150%. But has it gone too far, too fast? That's the question we're going to answer in today's video. Hi, I'm Noah Davidson, and today I'm going to do some technical analysis on the gold chart to try to determine whether this rally is losing steam or it's gearing up for another strong move. Let's dive in. Okay, we're going to start out here on the futures chart. And the reason I like to look at the gold futures chart is because that's what the professionals are looking at. And in a moment, we'll look at the GLD, the Exchange Traded Fund. And there are a lot of different instruments that track gold. You got the juniors, you got the minors, you got the micros, you got all kinds of instruments that track the price of gold. But the gold standard is the gold contract, the full-size gold futures contract. This is what an ounce of gold costs right now. It's called the spot price. And we are looking at a chart with 1 year's worth of data. And we can see that from the low down here at 25.4150, it's been on a pretty solid uptrend, pretty solid tear up to the most recent high of $4,398, just shy of $4,400. And what I want to do is I want to back out the chart and look at a bit larger time frame. Let's back it out to a 3-year weekly chart. And we can see those lows here at the far left of the chart at 1618. It's been on a pretty solid tear all the way up to that 43.98. And that little recent pullback is just 2 weekly candles into the rising 9-period exponential moving average. From a bullish perspective, this is a bullish retracement. Now, if you look down at the bottom of the chart, you will notice the volume on that most recent price run has been huge, more than twice the average. And that volume peaked right up here as the prices peaked. That is extremely high participation. What that tells me, that's institutional participation. So you've had a pretty strong run there. Now, let's back that back into a daily chart. Let's go hit that 1-year daily chart. And again, you can see from that breakout back in August, September, when it really took off again, you can see the volume has been steadily above its 50-period moving average and climbing until it peaked. And it peaked right up there near that all-time high. And we've seen some above-average volume on the sell-off as well. Now it's decreasing, but it's still above the average. And as the prices have dropped here on the daily chart, we've seen it violate the short-term moving averages, that 9-period exponential and 20-period simple. And it's hanging out here in a pocket between the 20-period and the 50-period moving average. And I can't help but wonder if we did a Fibonacci retracement, if we did a pull on the Fibonacci's, where the Fibonacci ratios are. Now, if you're not familiar with Fibonacci ratios, this will be a fun lesson for you. The Fibonacci retracement is something that traders really and investors really like to measure to help them understand the size and proportion of a retracement, meaning the price is coming back down. I'm going to start that measurement down here at these lows, 25.41, and I'm going to pull it up to that high of 43.98 and see if we can get that to stick right on that high. 43.98 right there, bam. And you can see that today's closing price is hovering right here at a 23.6% retracement zone. Now, a 23.6% retracement, for all intents and purposes, is the bullish retracement area. We like that bullish retracement measurement, and that is going to be something that gives some bulls the courage to step up and buy. Now, I'm going to take that same Fibonacci ratio, and I'm going to measure it off of the lows here in the middle of the trend instead of that low back there last year. And I'm going to pull that up here, and I'm going to stick that on the lows here from the base where it just took off from. And what you'll notice is that the 38.2% retracement, that's the golden section right there, is at the same price level as the 23.6% retracement from the bigger pull. And what that means is that we have a Fibonacci confluence. And a Fibonacci confluence, the fact that two different measurements came up to a Fibonacci ratio, is something as a technician, I love to see that. That is the golden section. Now, the golden section is 61.8%. But if you take 61.8% and you add it together with 38.2%, that is 100%. And so a 38.2% retracement is a golden section, or from the divine ratio, and it is just aesthetically pleasing to the human mind. We are used to seeing these Fibonacci ratios in nature, and what this tells me is that we are in that confluence zone and that the buyers might be willing to step up. And if they don't step up here, they'll probably step up at the 50-period moving average and that 50% retracement zone. And if I were to back this same Fibonacci ratio back out to the low, then we could probably pull as deep as about 3,700, 3,689 in that ballpark for a deeper retracement. So I'm going to go ahead and clear that up and erase that. And while I'm doing that, I would love to hear what your thoughts are on gold, what your technical reads are on gold, what your fundamental outlook on gold is. Put those below in the chat. I would love to hear from you, see what your thoughts are on gold. Are you a gold bull, or do you think that the emotions, the greed and the FOMO have driven prices too high? Let's take a look at this from a perspective with a couple of indicators on the chart. I'm on a weekly time frame, and I have a MACD indicator and an RSI indicator. These are two of the most common, most popular indicators out there. And what I see here on this weekly time frame is the little pullback, and the MACD is still showing really strong momentum. The MACD, the two lines are separating, the histogram has been screaming, and that little pinch on the MACD is really just caused by this pullback, and that's a pretty bullish MACD. And then the RSI measures overbought and oversold, and it was reading pretty hot overbought, and now that's pulled back down below the 70 line, so we're no longer in that overbought territory, but we're still above the 50, which is a sign of strength. If we switch time frames here to the daily time frame and look at these same indicators, you got a sell signal, a short-term sell signal from the MACD, and the RSI dropping back down. It's below the 50. And if these get deeper, if the prices continue to drop, traders may look to buy the bottom where the MACD crosses back up, and or that RSI gets oversold. I don't think it's going to get down there. I think probably the buyers will step up before that. I'm a bit of a gold bull at the moment, and simply understand that the little dip is the opportunity for people to buy, and they may want to sell the rip if it continues to run. But owning gold as an asset is probably never a bad idea, regardless of the price, because over a long enough time frame, gold's going to hold its value, and your currency, your fiat currency, your paper dollars are going to continue to lose their value. Remember, that is a feature of the system. It's not a bug. Let's go back to our main chart there, and that's it. I mean, from a fundamental perspective, there are reasons to buy gold. Could it potentially be overvalued? Yes. Over a long enough time frame, is it going to matter that much? Probably not. There are some people who are speculating that gold's going to $10,000. The gold bulls, the people who are selling the bullion, of course, they're always going to tell you the price of gold is going to go up. From a technical perspective, I like this pullback. I think there's a potential buy opportunity here. The bigger question is how do you posture yourself? Let's take a look at the GLD, the ETF, the Exchange Traded Fund. And you can see that this is 1/10 of the price. Prices here shot up to a high of 403, and they've pulled down to $363 per share at the moment. And they're in that same area between the 20 period and the 50 period moving average. And I could probably do a Fibonacci pull on this chart and get similar results. And again, the volume is very, very similar. These charts have a little bit more, they gap a little bit more because they don't trade 24 hours a day like the futures do. So as the future prices move, you'll see gaps on the ETF. But there are options here that you could trade. You could buy long-term options contracts, maybe leap contracts, maybe do something with a little bit less risk like a debit spread or a butterfly or something like that, where you can participate with slightly less capital requirements, where you don't need to have as much money to participate in this gold rush. So the bigger question in my mind is not whether the price of gold is going to go up or price of gold is going to go down. The bigger question is going to be, how would you position yourself? Are you going to buy the asset? Are you going to trade the futures contracts, the micro futures contracts, the gold mining stocks? Are you going to take a look at those? Are you going to use the stock? Or are you going to use the options? You have a lot of choices there. And there's a lot of creative things that we could do to control the asset with less capital. We could do longer term leap options. The implied volatility is a little high at the moment, but you could buy those longer term leap options and control the asset for a significantly less amount of capital. Or you could do creative option strategies like debit spreads that take even less capital, or maybe even something like a butterfly or an imbalanced or broken wing butterfly that have even smaller capital requirements, where you can participate in this gold rush if you know what you're doing. And probably the most important question of all is, what if we're wrong? What if the price of gold has gone too high and the bullish run is over and the asset's going to depreciate from here? How are we going to protect ourselves? You need to have a plan for that as well. And if you don't, you probably should stay on the sidelines. So if you enjoyed this type of technical analysis that we just did on gold, make sure to check out the video we just did on some of the hottest stocks out there. We've got one on NVIDIA where we take a look at that from both a technical and a fundamental perspective. I think you'll really enjoy that video. Click on the link here, and we will see you next time.